Good morning. I'm Irma Ranieri, Commissioner for Public Sector Employment and IPA South Australia President. Ladies and gentlemen, IPA SA partners and supporters, thank you and welcome to the Treasurer's Address to the Public Sector, brought to you by IPA SA and the Office for Commissioner for Public Sector Employment. Michael O'Brien will now welcome us to country.
Twila Maniputnik, Twila Wakadapatnik. Minyana na Maniputaji, Nai Nari Kamat Big Maraja, Nai Wangadi Mani the Putni, Gani Yatana, Irindi Yata, Tandendanga, Ipa Ku. Hello and welcome. My name is Mickey O'Brien. I'm the descendant of the Kaurna people of the Adelaide Plains, or the Miona people, also known as the Impatient One. And today, not only do I say hello and welcome you here as you come beaming through this beautiful technology that we have through the internet, but when we say hello, it is very important that we do that and we recognise that, because our face tells us where we've been, but our heart tells us where to go. And that's really important to understand, because when we stand on the lands of the Aboriginal peoples, we are connected to it, and therefore it connects to us. So we never say goodbye, it's always see you later. And so I say nakada, nei chaya, thank you, and see you later. And may we all see each other again soon.
I also like to acknowledge this land that we meet on today is the traditional land of the Kaurna people, and that we respect their spiritual relationship with their country. We also acknowledge the Kaurna people as the custodians of the Adelaide region, and that their cultural and heritage beliefs are still as important to the living Kaurna people today. I would first like to welcome the Treasurer, Rob Lucas, and thank him for being here today. Treasurer, we know your time is valuable and appreciate you being here. I would like to thank IPA SA and my office, who have worked together to deliver today's event. We acknowledge IPA's major partners, the State Government of South Australia's Senior Management Council, PwC and Flinders University. We also acknowledge IPA's professional members and counsellors. Today, the Treasurer of South Australia, Rob Lucas, is joining us to address the economic implications as a result of the COVID-19 pandemic. After we hear from Treasurer Lucas, we will be addressing questions that have been submitted by you, the audience, prior to today's event. Interviewing the Treasurer today is Jamie Briggs, Adelaide Managing Partner at PwC. We haven't been able to host our Economic Outlook breakfast during these unprecedented times. I hope you're all keeping well and safe and enjoying our connection through these virtual platforms. I hope to see you in person very soon. Now I'd like to welcome the Treasurer.
Thanks, Irma. Treasurer, welcome. What a time to be Treasurer.
Well, yes, it's an exciting time in one way, but sort of challenging in many other respects. I mean, the challenges for the country and the state are very much the same at the moment. We're I guess if 3 months ago, if you'd said to us, would you take where we are now, we would have, because we were all predicting much, much worse. It was interesting to see only this week ANZ issuing their estimates in terms of what the impact might be, and they've revised downward their impact on economic growth for the nation from between 4 and 5% impact to 2% for 2020, calendar year 2020. So it's still a massive impact on the nation and therefore on South Australia, but not as significant at this stage. And that's a credit to the health response in South Australia in particular, but nationally as well. We've got to manage the second wave. Clearly there's a bit of a challenge in Victoria at the moment, but we've got to manage the second wave, and then we've got to manage the economic recovery, and that's what's addressing all of us at the moment in terms of the discussions we have with Josh and the other state and territory treasurers. It's how we manage the transition from the mess that we're in, economic and financial, because there's no doubting there's been a huge cost, through to economic recovery, what it's going to look like through the end of this year, and then over maybe a year or two in terms of where we're heading. So they're the things that are addressing us. We released our economic update last week from South Australia, which was similar to what the national update's looking like in all the other state and territories. A massive increase in our state's debt. We're looking at state debt of about $30 billion by the end of the forward estimates period. We're looking at a deficit this year of $1.9 billion and next year, 2021, it'll probably be of the same order. So, from someone who's come from my background, sort of having lived through the state bank crisis, but to now be confronting this, it's much, much worse in terms of the impact on the state and state finances and the state's economy, more particularly. So I think in broad terms, the state government's response is going to be we could have pulled our belts in, cut back significantly on public sector infrastructure, spending on schools and hospitals and roads, but consistent with what the federal government's doing and the other state and territories are doing, we've said no, we won't do that. As we manage the transition out of COVID-19 and to the exciting future that South Australia's got with defence and shipbuilding, space, cyber, IT, we're going to have to maintain jobs in the South Australian community, and one way of doing that is to maintain the record $12.9 billion public sector infrastructure program. So all the key commitments we've made, the very big North-South Corridor project, Women's and Children's project, Lot 14, we're going to maintain our public sector infrastructure. We have said there's a few other things that we didn't promise, $1.3 billion covered sports stadiums in the CBD, as exciting as that might be for the foreseeable future. They're the sorts of things we're just not going to be able to afford. So there'll be some tough decisions we're going to have to manage, but we've decided to maintain the public sector infrastructure program. And the other thing we've decided to maintain is that we've been very much about reducing taxes and charges on business in South Australia. So our key narrative has been, if we want, as a small regional economy, to be able to compete, if our businesses are going to be able to compete nationally and internationally in terms of selling goods and services, the cost of doing business in South Australia have got to be nationally and internationally competitive. So we've abolished payroll tax for small businesses. There's a big $200 million cut in land tax over the next 3 years. The ESL bills have been cut by $90 million a year. Credit to the former Labor government, John Rao in particular, the workers' compensation costs in South Australia through that significant reform which we supported from opposition has meant that premium rates from just under 3% are now 1.6, 1.7% in South Australia for business, so that's great. And as we've just recently announced, water bills for households and businesses from the 1st of July is going to be a massive cut, between 10 and 20% for households and businesses right across the board from the 1st of July. And the job killer in South Australia, of course, electricity prices over the last 4 to 5 years. This year we've seen the first positive signs of reductions in electricity prices for households and businesses, and with the important building of an interconnector between South Australia and New South Wales, we'll see further downward pressure on electricity prices. So if I can wrap all that together to say, massive increase in debt, massive increase in deficit, at least for the next couple of years, but we have to keep our public sector infrastructure spending going, and we have to maintain the fact that business costs in South Australia have got to be nationally and internationally competitive so that we can grow jobs and grow the economy in the future.
It's interesting, you mentioned the state bank and other crises you've seen in what is now a very extensive career in public life in South Australia and around the national economy. What's your sense about the change that this crisis will cause in an economic sense? Is it a one-off blip or drop, or do you feel like this is more of a structural change that will really drive a different economic structure in Australia in the coming decade than what we've seen in the past 30 years of growth?
Yeah, look, I think this is much, much worse than the state bank. For those who are old enough to have lived through the state bank or to have remembered it, it is much, much worse in terms of its impact, both the immediate impact and the future impact on our state budget, but also in terms of the whack to our economy. There's going to be significant structural change. I mean, we're spending a bucket load of taxpayers' money trying to save as many businesses and jobs as we can, but we just can't save every business and every job in the state or in the nation. So credit to the federal government with JobKeep and various programs. We're spending a bucket load of money in South Australia, but you just can't save, or taxpayers just can't save every job and every business. So there's going to be major changes. There are some businesses that were struggling and just not going to survive. The tough and the hardy, we hope we'll be able to get through with some taxpayer-funded assistance in some cases. and we'll see a completely different change. But as I said, the advantage South Australia has got is that we've got locked and loaded 30 to 40 year, $90 billion worth of defence-funded infrastructure on defence, shipbuilding. We've got the space agency, the space programs. We've got Lot 14. So I think just over the COVID-19 horizon, we've got an exciting future, but we've got to actually assist as many businesses as we can to survive. But many, sadly, won't survive.
You reflected upon the ANZ revised forecast, and the impact might not be as deep as what we initially feared. There is clearly, though, a cliff coming in terms of what happens post-JobKeeper, and you made some comments last week around the federal government's attitude to different sectors in the JobKeeper sense. How risky is the cliff? How bad could October be if we get that wrong?
I think it could be very significant. That's why I've called, and to be fair, the federal government are saying with their review of JobKeeper they're at least canvassing these options, but I don't think there's any option other than to continue JobKeeper in some form or another. It might be JobKeeper 2, it might be JobKeeper by another name, but there are clearly significantly impacted industry sectors. Tourism's the obvious one, but there are others. International travel isn't going to be happening for a while, and even when it does happen, it's still going to be significantly impacted in terms of its... and so all of those industry sectors that feed off international tourism and international travel are going to continue to be impacted for some period of time. So they're going to be significant impacts. So JobKeeper of some form or another has to be maintained. It may well be that it's tailored or phased down even before September in some respects, but nevertheless continued for an ongoing period after that. I think the other issue that's going to happen in September is that a lot of the protections, such as thou shalt not evict anybody, in September, the banks have signed up to a 6-month deferral, but it wasn't a forgiveness of loans, it was in essence a rolling over and a capitalising of interest payments. So come September, the gloves are off in relation to that. So I've called also, didn't get as much publicity, for the financial institutions and the banks to be as reasonable as they can be within their fiduciary duties in terms of how they manage loans. We can't afford for the hammer to come down on a number of... And I think there's a lot of concern, as you'd be aware, in some business sectors that the hammer is going to come down in a way from September, October, as that 6-month deferral of loans period concludes.
And the regulation of banks obviously sits with the federal government, but as a state treasury, you've got real interest in how they act and behave and their impact on the economy, of course. Part of their duties is to meet regulations set on them by ASIC and APRA and others. Do you think there should be some thinking around whether some of those obligations in relation to retaining of capital and others need to be considered in this moment? Because
I've said that to Josh at our meetings with treasurers, state and federal treasurers. I've raised the issue that we've already seen early signs of people who, prior to COVID-19, had projects about to be financed by banks, LVRs of 70%. All of a sudden being reduced to 50%, so much greater equity having to be put in by the people who run the businesses and own the business, much less going in from the banks, and a very conservative approach being adopted. Now, in some cases that might be justified in terms of the riskiness of the project, so I make no blanket criticism, but clearly there are a number of projects that are locked and loaded, ready to go for when COVID-19 hit, and there is now significant concern in relation to the attitude of the banks. The bank's response to me and to the treasurers is, look, it is because of the national regulatory arrangements. And so I think it is an appropriate time for the federal government, together with the national regulatory authorities, to revisit and confirm the ones that are absolutely essential to be retained, that is the controls, because we don't want to see some of the events that have occurred in recent history reoccur. But we need to now look at this in the COVID-19 environment. Are there some of the things that, in terms of regulatory controls, which can be, at least for a period of time, be loosened? But even if they can't be, I think to the extent that the banks can, within their fiduciary duties, I guess look at it from the viewpoint of economic recovery and not bringing the hammer down on every business that might be in doubt. That's an approach which is going to be essential come September, October. If that doesn't happen, and if JobKeeper or some sort of ongoing program doesn't happen, then we will see a cliff in September, October. Now, the federal government's recognising that, Josh and Scott are recognising that. It's now a question of policy responses from the federal government, and to the extent that we can help in the states, from the state governments as well.
The South Australian situation has been lauded, and as it should be. We've had an incredible health response, and I think it's in the 70s of days now since we've had a community transmission. We contrast that with the Victorian issues, which have spiked, as you mentioned earlier on. Western Australia's also done very well, and yesterday they loosened their restrictions quite significantly. How much pressure are you feeling from your business community contacts around being more aggressive on reopening versus the management of the pandemic that Dr. Spurrier and others are trying to ensure we maintain and we don't have that second spike? How's that tension feel?
Yeah, look, there's a lot of conflicting pressure, and I think the Premier has got the balance right thus far, together with the Transition Committee. We are seeing significant loosening. Again, I think I said earlier, if 3 months ago you'd said to me we were going to have crowds at Adelaide Oval, the first in the nation at a football game, and we're going to be talking about, hundreds potentially, in big hospitality venues, etc., I would have said, well, look, I find that hard to believe, because, in March, April, we were looking at a 6-month lockdown period where we might have had just about everything closed. So, yes, there is significant pressure. There are a lot of businesses hurting, there are a lot of business people hurting, and they're seeing what's occurring in various states. They say, hey, Western Australia's got 1 to 2 square metres or whatever it is, or New South Wales is doing this, why don't you do that? But there is a bit of picking and choosing, because whilst in some respects Western Australia might be doing something, of course they're not opening their borders up to the same extent that South Australia is opening the borders up in terms of travel, etc. So there are a variety of differences, and you can pick and choose the best of each of the ones if you want to. And that's the response that business leaders will be giving you and giving me, and we understand that. So it's a balancing act. I think they're moving relatively quickly. We'll see further movement again this week, from what I understand the Premier is indicating, and inevitably as other states loosen up, and as long as we can maintain the health response to a reasonable degree. I mean, the Prime Minister's been correct in saying we have to manage the fact that there will be some outbreaks, but you're going to have to learn to quarantine them, clamp down on them, restrict them, and not allow them to sort of become endemic throughout the whole of or a wider section of that community.
One thing that, talking about the structural changes in the economy that are being debated at the moment and considered certainly by businesses like ours and by the public service employees as well, is this greater capacity to work from home or work more remotely than what we've seen previously. South Australia has long debated that we've got these great unique advantages to live in this city and be able to move around and much lower cost of living and so forth, but we've never seemed to be able to turn that into a competitive advantage. Is this the moment? Do you think is this the moment we can start to really impact on sort of the bring them home aspect of the attraction of living and working in this city rather than in much busier and more expensive cities like Melbourne and Sydney?
Well, the answer to that's yes, and the Premier and ministers have been pushing that line, I guess, for the last 6 to 12 months quietly, but COVID-19 does open up new opportunities, because I think a number of the corporate leaders, I know the Premier said to me on the weekend he'd had a teleconference with the BCA recently where he pitched this very similar message, that there are a number of functions currently residing, corporate office type functions, residing in big office blocks in Sydney and Melbourne. And if people are going to start looking at diversifying risks, managing their business over the next decades, the inevitable issues of pandemics and a variety of other issues, in terms of diversifying your risk, and if it's cheaper to run your business operation out of Adelaide as opposed to Sydney or Melbourne, then why wouldn't you at least contemplate that? And that's certainly the response the Premier's been getting to some of the big business leaders to say, hey, we're now prepared to look at it. Because it's not just your CBD office leasing costs, which are much, much cheaper. There are the lifestyle issues that you've referred to. But there are also issues, importantly, for a number of businesses in terms of the stability of our workforce, both in the public and the private sector. The churn rate, as it's referred to in terms of the constant loss of businesses as others people poach your staff, the cost of retraining, are significant costs for businesses. And certainly that's been a major part of our push nationally and frankly internationally, but mainly nationally, to people to say, hey, don't just look at the livability and the lower lease costs of the CBD and all those sorts of issues in South Australia. Have a look at the stability of the workforce, the lower churn rates, because that translates into lower business costs for you. So that's a national message that the Premier and myself and others are pushing in terms of coming to South Australia. Now, the issue about working from home is related but unrelated, if I can put it. We're still pushing this cost whether you're working in an office block in Adelaide as opposed to Sydney and Melbourne. There are lifestyle issues which clearly, in terms of working from home, that'll always be a percentage of your population. It'll be a bigger percentage in the future, I suspect, for public and private sector. But it'll nevertheless still be a minority of your workforce that are going to be working from home as opposed to working from the office. It depends on your lifestyle. If you're like us and it's only a cat at home, well, you don't have to worry too much, or dog at home, I should say. You don't have to worry too much. But if you've got, preschool-age kids at home, you're trying to work and manage those sorts of challenges, it's difficult in terms of working from home to the same level as if you're working from the office.
Yeah, it's an interesting debate, isn't it? Because it potentially changes dwelling choice of people as well, in looking for more room than what previously they had, and does it change the apartment living versus the freestanding properties debate again that we've had, and again we've got more of an advantage here than other places.
Well, certainly the apartment living has taken off much more in the bigger cities for obvious reasons, because just the cost.
Yeah.
As I say to those who might be listening or watching this particular presentation, that you can sell a house in Sydney and buy a suburb in Adelaide, so why wouldn't you? The lifestyle's better, and you can certainly have a much nicer home in a much nicer suburb, much closer to your office here in Adelaide than in Sydney or Melbourne.
So we had a number of questions come through from those watching or intending to watch today. A series of those questions related to general government debt and the position of South Australia in terms of debt. And, for the last 30 years, we've seen a long debate about good and bad debt. And, there's been a strong view, particularly on the Conservative side of politics, that debt, government debt is bad and it should be reduced. We're obviously living in an age where the Reserve Bank Governor is out there proudly saying borrow, borrow, borrow. Explain to us, how do you feel about general government debt at this point in time?
Well, it's been a game changer for me in terms, because as I said earlier, I lived through we were in government at the time of the state bank debt disaster, and so it was all about reducing debt, and that was the overall mantra right through the business community and the general community. But the whole world's changed. Now business leaders are actively managing debt. We're in a much lower interest rate environment. The Reserve Bank Governor is saying publicly and privately, hey, we see these historically low interest rates here for many years to come, I think was the phrase he used yesterday. He certainly told the Treasurers that in a teleconference a couple of weeks ago, exactly the same message. South Australia borrowed $5.5 billion in the last 11 months, and the average interest rate for us was 1.3%. We actually had a bond out there which is quite innovative. It varies a bit over a quarterly basis, where the interest rate on that is going to vary between 0.4 and 0.6%. So it's extraordinary. Those of us who lived through interest rates of small businesses of 22%, home mortgage rates of 16 and 17%, I say to my children, it used to be, and they laugh at you and say, hey, no, interest rates are always something with a 3 or a 4 or maybe even a 2 in front of them, Dad. But it wasn't always the case, and it won't always be the case. But for the foreseeable future, we've got historically low interest rates. So we're locking in. It's inevitable we've got this massive increase in debt. Otherwise, we would just have to turn off all of our public sector infrastructure, stop building the hospitals, the roads and the schools, and there'd be a massive further reduction in jobs in South Australia and nationally as well. So it's an inevitable consequence of COVID-19. We are fortunate that we're at historically low interest rates, so we're locking in long-term debt. So we're borrowing, some of our debt now is up to 12 years in South Australia. As I said, we're averaging 1.3% in terms of debt. We're still going to have to repay it. It'll be, our children and our grandchildren will be repaying the debt, but it'll be the same for the other states and territories. It was the same for the Commonwealth Government. It'll be the same for other national governments as well.
The size and shape of the public service is always debated in South Australia, and I'm sure many on this podcast are interested in this answer and how you're feeling about the public service in this environment. Does the view you had previously I think it was essentially retaining the shape of the public service and the size of the public service, does that remain? What's the vision for the public service in the next couple of years that you see?
Well, I think the first thing is credit to our public service right across the board for the way they've helped us manage COVID-19. And it's not just the frontline health workers who rightly are portrayed as heroes, our doctors and nurses, etc. But we've had people having to work in call centres with contact tracing, the police, the correctional services officers, people working in residential care, all of them with onerous additional responsibilities in terms of managing the safety of either their client group or their customer group or, frankly, their own staff as well. So credit to not just in South Australia but nationally as well. But the reality is in any business, whether it's private or public sector, you can always manage it more efficiently, and that's the challenge for the public sector. We need to continue to manage more efficiently. We, unlike some of the other governments, have said we're not going to freeze public sector wages during this 12-month period. As you know, New South Wales, Queensland and the Commonwealth Government to a degree have all frozen public sector wages. We've said all along we're able to afford and budget sensible, reasonable wage increases. We couldn't afford the 3 to 3.5% that some of the union leaders were pitching to us. But we've continued to maintain that position as we've negotiated enterprise agreements, and will continue to do so. But the public sector has to accept that they're no different to the private sector. In your business and in other businesses, you have to continue to look at efficiencies, and it will mean there'll be a constant challenge in terms of can we do the same task more efficiently in the future. And that'll put some pressure in terms of overall public sector numbers. We've committed to the continued arrangements that we've got at the moment in most of the big public sector spending areas. We've just negotiated an EB with education. The nurses have just finalised or process of finalising agreement. So we'll continue to operate as best as we can, but we're going to have to continue to look at efficiencies right across the board.
So this interview usually occurs, I think, the morning after the budget or around the budget week. Budget's obviously been put off for good reasons. Knowing you as I do, you'll be thinking about that budget speech, which is coming up in October from memory. What are the themes likely to be, or is it still sitting on the watchtower to see what happens in the economy in the next little while, or how are you feeling about
Yeah,
that?
look, I think it's the latter rather than the former. The whole world could change. If we don't manage the second wave successfully, well then we're going to be in a completely different set of circumstances. Hopefully it'll be a gradual continuation of where we are evolving at the moment, that is gradual easing of restrictions, and that when we come to that budget period in October and November of this year, that's the set of circumstances that we're managing. It'll still be a financial mess. It'll be a massive increase in debt and deficit. It'll be the need for continuing efficiencies within the public sector, but within the broad mantra that is, if we're going to grow South Australia's economy, we have to do it within the construct of keeping our businesses competitive. So, some of the responses that have been pushed to us is, will you introduce a wealth tax? Will you introduce a new broad-based property tax, etc., to help pay for it? Our answer has been no, because that's inconsistent with growing jobs and growing the economy in South Australia. the alternative way to generate more revenue is to actually generate more economic growth and to generate more jobs growth in the state. The more people are employed, the more payroll tax is paid. The more economic growth there is, the more stamp duty that is paid. The more national economic growth there is, there's more GST being paid, which is the big hit for our budget. I mean, we're going to lose $1.1 billion from our GST revenue next year compared to what we predicted just 12 months ago. So to come back to your question, we're going to have to suck it and see, to use a colloquial expression, see where we are come closer to October, November, and then we'll frame our budget accordingly. But it'll be within that broad narrative of growing the economy and growing jobs, rather than, to use the Prime Minister's term, pulling the doona overhead in financial terms and cutting public sector infrastructure. We're not going to do that sort of policy response.
Treasurer, it's always fascinating. Thank you.
Pleasure.